Demystifying Bitcoin. Halving, a simple explanation. Bitcoin halving is a fundamental event in the Bitcoin network that occurs approximately every 4 years. This event is hard-coded into Bitcoin's design. It ensures a controlled and gradually decreasing rate of Bitcoin creation. During a halving, the reward that Bitcoin miners receive for adding new blocks to the blockchain is cut in half. Miners are crucial to the Bitcoin network. They use powerful computers to solve complex mathematical problems. Solving these problems validates and adds transactions to the blockchain, ensuring the security and integrity of the network. As a reward for their efforts, miners receive Bitcoin. This reward is the primary way new Bitcoins are introduced into circulation. The halving mechanism has significant implications for Bitcoin's economics. By reducing the rate of new Bitcoin creation, halvings reduce the supply of Bitcoin over time. This reduction in supply can have a profound impact on Bitcoin's price. Looking back. Bitcoin halving's historical impact on price. Historically, Bitcoin halvings have been associated with significant price surges. This correlation is rooted in basic economic principles of supply and demand. When the supply of an asset decreases while demand remains constant or increases, its price tends to rise. The first Bitcoin halving occurred in 2012. Back then, Bitcoin was a relatively obscure digital asset. The price hovered around $12 before the halving. In the year following the event, Bitcoin's price surged to over $100, demonstrating the potential impact of halvings on the market. The second halving in 2016 saw Bitcoin's price rise from around $650 to nearly $20,000 in the subsequent year and a half. This dramatic increase solidified the halving's reputation as a potential catalyst for major price movements. Crystal ball gazing, expert predictions, and the elusive $100,000 mark. As the 2025 halving approaches, speculation about Bitcoin's price trajectory is rampant. Many analysts and cryptocurrency enthusiasts believe that the halving could propel Bitcoin's price to new all-time highs. Some experts even predict that Bitcoin could reach $100,000 or more in the aftermath of this event. These predictions are fueled by the historical precedent of previous halvings, coupled with the growing mainstream adoption of Bitcoin. Institutional investors are increasingly recognizing Bitcoin as a viable asset class. This institutional interest is adding further fuel to the bullish sentiment surrounding Bitcoin's future. However, it's important to approach these predictions with a healthy dose of caution. The cryptocurrency market is notoriously volatile. Unforeseen circumstances, regulatory changes, or shifts in market sentiment can significantly impact Bitcoin's price. Section 4. The Miner's Dilemma, Navigating the Post-Halving Landscape. While the halving is a momentous occasion for the entire Bitcoin ecosystem, it has particular significance for Bitcoin miners. The halving directly impacts their profitability. When the block reward is halved, miners earn 50% less Bitcoin for their efforts. This reduction in revenue can pose challenges, especially for smaller mining operations with thinner profit margins. They may find it difficult to remain profitable, especially if the price of Bitcoin doesn't increase sufficiently to offset the reduced block reward. Larger mining operations, with their economies of scale and access to cheaper electricity, are generally better positioned to weather the storm. However, even these larger players may need to adapt their strategies, improve efficiency, or consolidate operations to maintain profitability in the post-halving landscape. Section 5. Market Reactions and the Future of Bitcoin. The Bitcoin halving is a highly anticipated event in the cryptocurrency world. Its impact extends beyond miners to the broader market. The halving often leads to increased market volatility as investors and traders adjust their positions in anticipation of potential price swings. Transaction fees on the Bitcoin network could also be affected. As the block reward decreases, miners are increasingly reliant on transaction fees to compensate for their operational costs. This dynamic could lead to higher transaction fees for users, at least in the short term. In the long term, the halving reinforces Bitcoin's core value proposition as a scarce digital asset. With each halving, the rate of new Bitcoin creation slows down, ultimately approaching a fixed supply limit of 21 million Bitcoins. This scarcity, combined with Bitcoin's decentralized and censorship-resistant nature, continues to attract investors and users seeking an alternative to traditional financial systems. The 2025 halving is another significant milestone in Bitcoin's journey. While the exact ramifications remain uncertain, the event is likely to shape the future of Bitcoin and the broader cryptocurrency market for years to come.